First of all, good morning, everybody. It's a pleasure to be here. Can I make an apology first of all? If my voice starts to go or become croaky, it's my fourth Brexit event this week. So I've been Birmingham, Inverness, Tuesday, Birmingham again, Wednesday, Inverness today, and Ashford in Kent tomorrow. So although some of them weren't Brexit related, unfortunately Brexit became the main topic. So in terms of myself, I'm obviously here from the Institute of Export and International Trade. I have been involved in international trade for a number of years with both importing, exporting businesses, and have also worked for a couple of the banks, one of them being Bank of Scotland. I have lived and worked in Scotland as well, so hopefully got some understanding of some of the issues for Scottish businesses. And I've been involved, as Martin indicated, with providing Brexit workshops for colleagues of both of Scottish Enterprise and Highlands and Islands as well. So I guess one of the purposes for today is to try and help you determine the key impacts, the key Brexit impacts for your business. And clearly there will be several impacts and possibly more impacts there. And one of the important takeaways, I think, for yourself will be to try and identify probably the top one or two or three. Now, there might be 20 impacts for your business, but try and consider what is going to impact your business the most. And from speaking to some of you outside, it seems that you've already got a good concept of what the issues could be, which is great. To obviously try and help you determine to have conversations with your customers, suppliers, manufacturers as appropriate as well. And that's one of the key messages I want to get across is it's very important to speak to your customers and suppliers, probably especially in Europe, but either other parts of the world and other parts of the United Kingdom as well. There is obviously maybe a concern if you speak to customers and suppliers that they're going to think, why are you chatting to me now, and I want a price discount or something like that. But those conversations probably are very important to have, and I'll put some scenarios together today of things that we hear at the Institute of Export from companies, importers and exporters, that they're telling us as well. And certainly one of the key messages is the companies that ring us in a panic or urgent have not had those conversations with their suppliers and customers, and they're getting taken by surprise. So very, very important to have those conversations. And obviously to allow you to reflect on not just your business, but your wider industry sector as well. Because there is no doubt sometimes that some of your competitors, not just competitors in Scotland, in England, the rest of the UK, in Ireland and Europe, they will also be thinking about what is going to happen as well, so that they will be acting in some way. Again, some businesses will have considered, have plans more than other businesses, but you've probably got to consider that some of your competitors will have Brexit planning in place and will be considering actions. Okay, so yes, I mean, the tone of today probably is going to be slightly, if you like, negative or depressing. But I think one thing we are seeing with Brexit is the businesses that are planning, it's allowing them maybe to take planning now for export that they maybe were going to have to do in 5-10 years time. So by taking that planning now, it's actually bringing it forward and helping those businesses prepare for the future. So I guess that's one positive aspect of it. So we hear a lot in the news. We cannot help but hear it in the news, the television, what's happening with Brexit. And clearly we hear too much, and a lot of what we hear is clearly political. But if we go through the Brexit timeline, and apologies again if I'm telling you things you already know, on the 23rd of June 2016, the United Kingdom voted to leave the European Union. And the now famous Article 50 was triggered on the 29th of March, get this working, but 29th of March 2017. And under Article 50, the 2-year clock starts ticking. So effectively this magical date we keep hearing now of the 29th of March 2019 is when the United Kingdom leaves the European Union, which was 2 years from when Article 50 was triggered. In November last year, a withdrawal agreement and political declaration was agreed with the European Union by the UK government. And by way of pre-reading, just to try and assist you, 2 documents were circulated. One was a document on some of the key aspects of the withdrawal agreement political declaration. Another was on key trade terms, but also linking that to Brexit as well. So I hope you'll find those documents useful. They are my interpretation, I must stress, on the aspects. Now, as we know, on the 15th of January, just over a week ago, the UK Parliament rejected decisively that agreement. And a plan was put forward on the 21st of January. You can see the slides were done a few days ago. A plan B, which clearly looks remarkably similar to plan A in that respect. And there's some debate about what this parliamentary vote is next Tuesday. Is it another vote on plan B, or is it more likely a discussion on plan B, so that the UK government can then go to Brussels with a clearer view of what the negotiating stance is? And it's probably more likely to be the latter, but as we move through the next few days, that will become clearer. So on the 29th of March, a few things could happen, clearly. The United Kingdom could leave the European Union. If the UK doesn't leave the European Union and an agreement is reached, then a transition period commences. And I'll speak more about that transition period on the next slide. And the transition period runs through to 31st of December 2020. Now, what we're saying a lot to businesses is that even if a transition period is agreed, and it can be extended as well. There can be an extension potentially of a year or two. If there's an extension to a transition period, that extension has to be agreed by the 1st of July 2020. So what we don't want businesses to do if a transition period is agreed is just relax and think, oh, that's good news. Because we still potentially could have issues going forward. During that transition period, there's a lot of discussion about negotiating a comprehensive free trade agreement with the European Union. That negotiation has to take place, clearly. And if the UK leaves the customs union, then we are still going to have some of the issues that we would have under a hard Brexit, some of the same issues that we're going to talk about today. So companies can't relax, so to speak, and think, well, that's fine, we've now got another year and a half, 2-3 years, we can just relax and then worry about it in about 2-3 years' time. Because those issues are still going to be there. What it will do is, if you like, buy some time, so to speak, to prepare more there. Or we could have a no deal, or there's another solution. I'm happy to talk about what the other solutions could be, but I guess the focus of today is that businesses must prepare and potentially prepare if there is a no deal, what the scenario is there for that. But again, I would stress that some of what you will do will be putting good practice in place for the future. And obviously for those of you that possibly export outside the European Union, some of those processes you need to do, you're already doing. The difference being is that the volume potentially will be much higher for you. And there's other aspects in addition to tariffs and customs union with Brexit as a whole as well. So businesses must plan. I appreciate some of you or most of you may have already undertaken Brexit planning. Again, I do appreciate, we hear so much, the subject probably is quite complicated. And because of that complication, there is definitely a temptation to think, well, I've no idea what's going to happen. How can I prepare for something that's not going to happen? But clearly, as we move closer to the 29th of March, there is a need to prepare. So in terms of a transition period, so during the transition period, the UK will be outside the European Union, but will retain access to the single market and the EU customs union. So basically, in terms of the single market, that means we still have this concept of frictionless trade. So goods move in free circulation throughout the European Union. And that's good as well. And we're part of the customs union. So some of the requirements I'm going to talk about in terms of customs declarations will not be required whilst we're in that transition period there. And it will be governed by the withdrawal treaty, unless the withdrawal treaty as we know it today changes. So the agreed deal is to stay in the customs union, and the UK must continue to pay into the EU budget, and obviously some figures have been talked about, the 39 billion figure, and that clearly has been a matter of debate. But as we've said, originally must end by 31st December, but can be extended. And the UK must continue to adhere to all EU laws and regulations, so as we know them today, if there is a transition period. But the UK doesn't have any voting rights, and it must adhere to EU trade policy. Now, it's important to say in terms of those voting rights, even things like the digital single market in Europe, which will affect probably some companies more in the creative industries sector, for example, the UK will lose access to some of the voting in that. So some of the decisions that take place, the UK will not be able to influence. So obviously that could be a factor. So this is obviously about trading services and not just trading goods, which I appreciate will be important for some of you. And the European Court of Justice jurisdiction continues to apply, which again has been an emotive topic. So what I'm going to do in the next few slides is go through some of the impacts, some of the technical aspects, and then after the break, or even just before the break, we're going to start to look at what contingency planning could look like, not just in terms of what the contingency action is, but what the plan could be as well. Now that will vary from company to company, it will vary from sector to sector, but just to give you some idea of what some companies are doing, and I appreciate your company may have done that already. So again, we'll be going through a 12-point plan today. You also have handouts on your desk in the folders, which we will be referring to during the course of today. So there's 4 handouts as well. So let's see. So first of all, talent retention, talent attraction. Personally, I don't like the word talent. I think it's also referred to as skilled, unskilled, and that's what a lot of the politicians would refer to it. So the current status, and it was in the document under citizens' rights, where I talked about what's been agreed in the withdrawal agreement. Currently, the UK government, it hasn't been voted in Parliament, has put forward that the Migration Advisory Committee have put forward a proposal that the definition of skilled unskilled, the threshold is £30,000. So if you earn over £30,000, you are deemed to be skilled. And the theory of that is you are welcome in the United Kingdom. I'm saying that's the theory of it there. Now, that hasn't been voted on, and that is subject to some debate. And a review that was done by PwC indicated that 64% of the people below or unskilled were in the £20,000 to £30,000 bracket. That was just their findings. Now, it's not been voted on. When it is voted on in Parliament, that will be quite a sort of contentious issue, clearly, when that's voted on. As you probably heard on Monday this week, for EU nationals, there's roughly around 3 million to 3.5 million EU nationals in the UK that could apply for UK citizenship. And the £65 fee was waived, albeit you've still got to pay it and then get the refund at the moment. And if you have an iPhone, you can't apply via an iPhone currently. But that's being worked on. But when we look at planning, one of the things that we do sometimes encourage companies to look at is to actually help their employees apply for UK citizenship. So to actually encourage them so that they become UK citizens. So like tie them into the organisation more. Now with regard to the other side, with regard to companies with EU staff overseas, it's almost a reciprocal arrangement. However, what is unclear in the withdrawal agreement and political declaration, there are aspects of it that talk about comprehensive, feasible things are going to happen, but it doesn't actually define what that means currently. But one of the aspects is that UK citizens can apply for EU national status as well in one country. So if you have people in your companies that are moving around EU countries, that has not really been commented on currently. There will be clarification on that, I'm sure, but it's one of these areas that's not clear. So if you have, for example, somebody who is 1 week in Brussels, the next week in Amsterdam or something like that, that is unclear. Clearly, if Brussels is their main base, they can apply for citizenship in Belgium, for example, there. So that's, if you like, where we are on that, but clearly for some sectors we appreciate it's a big issue. There has been talk again, and the Citizens' Bill hasn't been voted on in Parliament. that workers who are unskilled will be able to apply for 12-month visas. Well, in theory, that's good. However, after those 12 months, they'll have to return home and they cannot apply for another 12 months. So again, this has not been voted on. I think it's very fair to say this will be a hugely emotive topic in Parliament and the House of Lords as well. There will clearly be some debate on it. And clearly there has been some debate within the Conservative Party because the actual production of this detail was delayed as well. Introduction of import tariffs and possibly quotas as well. So quotas is possibly missed out to some extent, and some industries clearly will be subject to quotas more, agriculture unfortunately being an obvious example of that. So import tariffs. So I don't know, you may well know what your import tariff could be, or so what the import tariff to UK or import tariff for exporting to Europe. If you haven't got software, in theory you could ask your freight forwarder, your Chamber of Commerce. One way to also look, and we're going to look at this in the planning, is there's something called an EU market access database. So I don't know, has anyone here in this room used or heard of the EU market access database? Yeah. So again, you can put your commodity code in, but if you don't know the commodity code for your product, you can filter it. So if, for example, it's yarn or beef, and you just filter it down in all the different categories until you get to your commodity code, you put it in and then it tells you the tariff. Now, currently the EU market access database is available to anyone who is accessing it from the EU. Once we leave the EU, we will not be able to access it, but the UK is developing a UK market access database. And the EU market access database also gives you non-tariff barriers as well. Now that's more important obviously for exporting outside the European Union. So if you're exporting to Algeria, United Arab Emirates, for example, it will tell you some of the non-tariff barriers in terms of packaging, labelling requirements needed as well. Now, people have different views because clearly the EU market access database is good, but it's obviously takes time to get used to. But if you want to quickly look up potentially what the code, the tariff code could be, you can look at the EU market access database. Now, if the UK leaves the European Union and reverts to WTO rules, World Trade Organization, we're going to look at a slide shortly, it can set its own tariffs. And we'll come back to that point shortly. Additional customs procedures and declarations. So as some of you have indicated, or most of you have indicated, potential delays at ports impacting just-in-time supply chain. So again, we're going to look at that aspect of what that could mean. And just one of the things you have in front of you there is a letter that HM Revenue and Customs sent to 145,000 companies in late November, early December. And the idea of that letter was for companies that currently import and export to Europe, but not outside Europe. So effectively, they would have to make those companies customs declarations for the very first time. Now, the Prepare for Brexit website is going to be demonstrated after in the Scotland Prepare for Brexit website. That letter is also on the website as well as other information which we're going to go. Now, if anyone, can I ask anyone in this room, for those that that already, it's not applicable for those already importing or exporting from outside the EU, but is there anyone in this room who was only dealing with the EU who received that letter? Okay, one, great. Okay. Oh.
Yeah, some of my clients do.
They do. Okay, good. So someone did receive that letter. And what that letter was trying to say to those companies is, currently you do not make customs declarations. These are the, you need to apply for an EORI number, which again, those of you that import, export outside Europe already will already have. And you then need to determine how you will make customs declarations. And the options that were indicated were potentially speak to your freight forwarder or your customs broker. And we will be speaking about the role of the freight forwarder, which clearly has a very, very key role in the Brexit process, and the importance, again, one of the key takeaways for yourself today, as well as speaking to your customers, suppliers or your manufacturers, is to speak to your freight forwarder. That's got to be one of the very first things in terms of planning that you do to make sure they're ready as well. but also in terms of do they have the capacity? Because the number of customs declarations, it's been estimated, will increase in a no Brexit situation from 155 million to 355 million. So that is quite a big increase. So a lot of people, companies, will be making declarations for the very first time, and those companies already will be making a lot more declarations that currently make declarations. So freight forwarders will be making a lot more declarations on behalf of companies. But one point on freight forwarders I do want to mention is, although the freight forwarder can make the declaration for you, they will obviously charge you for the service, you are responsible for that declaration. So if the wrong commodity code is put in, you are subject from HMRC for fines and penalties if it's the wrong declaration. So you have to check that declaration irrespective of the freight forwarder doing it for you. And one of the ways will hopefully be, in the event of a hard Brexit, from the UK Market Access Database. And in terms of customs brokers, we do have a few customs brokers in the United Kingdom. I wouldn't say we have a huge number, but there is a lot of training going on currently to create a new customs broker. And the Institute's involved in that training and a professional qualification to create, if you like, the next new occupation, if you like, increased occupation. Because in countries like the United States, Australia, they have customs brokers which are used that more or less declare the goods on behalf of importers and exporters in those countries. You can purchase some software, but I'm very conscious for smaller businesses, there's a cost to software and there's a time for software as well. Software does have trade compliance packages. Unfortunately, as far as I know, Sage doesn't have it. But other software does. But I very appreciate software such as Oracle and SAP is going to be very expensive, and certainly not all companies can necessarily afford that. But it does have trade compliance packages that will have quite intuitive commodity codes. You can make customs declarations, interface with your accounts payable, accounts receivable. There are other softwares, there's smaller software providers that will just provide that functionality. It might not link with your accounts payable, accounts receivable. It might be a more standalone package as well. And again, the government has provided grants for software purchases as well. So again, on the Prepare for Brexit site, there's information on the grants for purchase of software. Or you can try and employ people or train existing people in your company. And there is grants for training as well. And I think the grants for training is roughly, I think it's a maximum of £1,200 per person. I think it is there. And it's, to the best of my knowledge, the precise figures are on Prepare for Brexit. If you're a small business, which I think is defined as under 50 people, you get a 70% discount on the training. A medium-sized business, 60%, and a large business, 50%. So details on the Prepare for Brexit website, which we can obviously go through there. So it's giving you those options, but I very much appreciate for companies that have traded with Europe and not the rest of the world, that this is all new to you as well there. But so HMRC is saying in the event of a no deal, that's what you have to consider. Now, if your company has not received that letter, at least you've got it now. But obviously you need to start thinking about it as a company.
Can I just ask a question?
Yeah, please, yeah.
We already use the EMCS system. Is there going to be an additional requirement on top of that?
No, it's just volume. There. So if you're already importing, exporting out, it's just really a question of volume there. Obviously, other issues like tariffs, etc., are still going to be there. People recruitment, this was coming back to the skilled, unskilled. Increased costs in doing business. Now, a lot of you, if not all of you, have brought that out, is under a hard Brexit, there probably will be increased costs in doing business. So very much appreciate that could impact the cash flow of businesses, potentially. And then it's a case of how are those costs, are they consumed within the business? Are they passed on to the consumer? Are they passed on to the customer if it's a business-to-business sale? So those are all things to consider. Now, not asking you for 1 minute to go to your overseas buyers in Europe and offer them a 10% discount straight away. Definitely not that. But what you should consider is if they start approaching you, what stance are you going to take? What could you do to actually either mitigate that increase in costs, or what will your negotiating position be? Now, we've heard from some companies, not in Scotland, in England, that they say, well, I'll stop exporting then. Clearly that's an option. But the risk there is, if more companies do that, the UK, Scotland will become a more crowded place in terms of competition. And also some European companies who are setting up operations, potentially looking at the other side, will also be in the United Kingdom. So United Kingdom will become a very crowded place. So there is a risk in doing that. And a risk if you are supplying companies who export is, again, that they will come under pressure as well. So it's, whilst it is an option, it's not necessarily the most viable option. Impact on customer and supplier relationships. And one important thing I think to bear in mind is it's not just UK companies that will be faced with customs declarations for the first time. Some of your customers, some of your suppliers in Europe will have exactly the same situation. So again, speak to them and sort of discuss how they're feeling, what support they're getting, and whether you can work together. Because I guess the most important thing for it is the relationship you have with your customers, suppliers, your manufacturers. That's even more important than Brexit. If you've got a good relationship with your customer, supplier, and manufacturing, that means a lot. There. Now, clearly, if there's very high tariffs, that's going to be very difficult. But and it's no great secret. Clearly, the agricultural products have the highest tariffs by far, whereas obviously engineering, manufacturing will be lower, and some other products will be lower. So it's going to be very hard if there's very high tariffs there. Impacts on supply chain, so imports of raw materials, ingredients as part of production process. So that also includes the rules of origin, which we're going to look at as well. And loss of EU grants and funding streams for some sectors could be an issue as well. So, having sort of referred to trading goods, let's look at services, because I'm conscious that services sometimes can be passed over in all this debate on trading goods. So, Brexit also impacts trade in services. And just as there are WTO rules for trade, there are WTO rules for services, the General Agreement on Trade in Services, GATS. And that does provide a framework. So there are 164 members of the WTO. And that includes most of the countries in the world. So China joined the WTO in 2001. Saudi Arabia in 2005, Russia in 2010, Kazakhstan in 2015. So nearly all the nations of the world are WTO members there. So basically it allows you to sell your services cross-border in any WTO member. Well, that's good news. There is a caveat to that though, however. If the country feels for strategic reasons, or national reasons, it can block the sale of that service. Now, clearly, if a product is deemed to be harmful, or let's say, impacting on the local population in some way, that in theory could be a valid reason for banning the sale on service, and there are obviously some examples of that. But if for a strategic reason a country wanted to block, they can do under WTO trade in services. That will, however, be for more, let's say, products or services that are deemed to be harmful in some way to the local population there. Also, whilst we're on this subject, data protection, GDPR. In the event of a hard Brexit, after the 29th of March, it could, only say could, impact data flows. So if your company is holding data on a European business or a European consumer, such as email address, bank account details, then technically, I do say technically, you will no longer be able to hold that data after the 29th of March, and vice versa as well. There are a couple of solutions for that, and again, these solutions are being considered now as we move towards the 29th of March, is the UK could negotiate an agreement with the EU for either 6 months or a long-term agreement where we have an exchange of data. Could happen. Could we do it in 2 months? Question mark. You as a company can apply for an exemption clause as well. And I need to get more information on this because the information is not readily available that allows you to hold that data. but you would need to fill out forms, you would need to be investigated to how you use the data and whether your data is secure to achieve that. And whether that can be done in 2 months is a challenge as well. So, and this is something we would not encourage at all too much, is obviously you hold the data in somewhere in the European Union itself, which would allow you then to continue to hold the data. So you have data center in the European Union. Not necessarily encouraging that, but obviously in theory that is a solution. But hopefully the main solution is the UK will negotiate an agreement with the European Union to exchange data there. I think sometimes in these more extreme examples like this, you would like to think a more pragmatic view would be taken and that agreement would be reached. So, business preparedness for Brexit. So 58% of it, so this was a survey completed in October last year. 58% of businesses in the Highlands Islands feel UK's departure from the EU presents business risk. Some risk, 23%, large 35%. But clearly, as we move towards the 29th of March, that figure is probably going to increase. And looking at the issues, interestingly, the change in regulatory environment was the top one at 58%. And so I don't know how clearly you can actually see the slide there. Introduction of tariffs, second highest at 53%, as well as 53%, as well as change in funding policy. But what it shows is there are about 9-10 issues there, which are all very, very important in terms of impact on businesses.